All right, what's up, guys, and welcome to today's live trading room. Hope you guys are doing good. I got Michael here with me. What's up, Michael? How you doing?
Hey, how's it going, Jonathan? I'm great.
I'm all good. We got an exciting episode here for you guys. We're gonna be focusing on indices here, I believe, and we're gonna be talking a little bit about indices with Michael because obviously he's the go-to guy when it comes to stocks, and obviously indices has you know just a little bit about to do with stocks.
Very much, yeah.
All right, got a lot of people here. We got Puerto Rico, Toronto, South Africa. It's amazing how global this community is. Cold Denmark, yeah. Sweden is pretty cool as well. India, awesome. So Michael, you're mainly you're mainly trading stocks, right?
Yeah, although in the last 4 months, I focused on the NASDAQ, the index, but besides that, mostly in the last 16, 17 years, focused on day trading stocks, yeah, US market.
But you're not. And for those of you wondering, you might have seen Michael doing lots of other trading rooms. But this is I've recently started here with the 5ers, so I'm thinking we want to do like sort of a interview session here for. So this would be a good way for me to get to know Michael and you guys to get to know Michael and his trading style a bit more as well. So when it comes to indices, would you say, well, let's put it this way, when the difference between stock trading here and forex, because obviously I'm pretty sure most watching this are more into forex trading. And by the way, guys, if you are trading stocks or forex, let us know in the comments. Would be interesting to see the difference.
Definitely.
But maybe you could pull up your chart, and we could perhaps start looking at something here. And I would also love to know what the major differences between forex trading and the stock market.
Yeah, that's a good one, Jonathan. I mean, I'll talk about the NASDAQ here in a second, but in regards to your question, when it's come to trading forex and stocks, I tried both, by the way. I tried also forex for a couple of months a few years ago. It was great, but for you cannot do everything all the time, so you got to keep your focus as well. So basically, the forex market runs pretty nicely 23 hours a day, so you can play with it. You can trade in the morning, in the midday, evening, whatever. In the stock market, you need to focus. You have those 6.5 hours, like for the regular hours, and you also have pre-market and aftermarket, but it's a bit different trading style there. So the idea is that you have 6.5 hours, and this is for some could be a con or a pro. That depends on how you look at it, right? Because in my opinion, it's a great benefit to have the market open only for X amount of time or hours, and then you need to focus for those hours, right? I remember guys they traded forex, like friends that traded forex, that used to wake up at 3 a.m., open the laptop while they're sleeping, half dead,
Yeah,
and
that's me.
yeah. So trying to trade while they sleep, in most cases, it won't end up well. So in that case,
Yeah,
I really
and
like it.
speaking of that, crypto is 24/7. And I remember when I started trading crypto, that was
Wow.
truly horrible because I didn't even have the weekends to relax. Now when I'm trading forex, at least I can take it easy on the weekends. But
Yeah.
I do really understand what you're saying here with having set hours, because I kind of wish that, because my trading hours are usually from 9 in the morning till at the end of this live stream, so around 4. And but then I keep getting alerts, I keep getting signals, so it
Yeah.
can be a bit distracting.
Yeah, it gets you into a FOMO mode, right?
Yeah.
Always, I'm gonna miss the next opportunity. So in that case, the market is closed. You don't have to do anything when you have those 6.5 hours. And also, the pretty in trading stocks, you also have tons of opportunities because you have a lot of symbols, right? For example, in Trade Pool, we have 12,000 symbols. So imagine from those 12,000, obviously you have a nice chunk of opportunities for that day, comparing, let's say, Forex, that again, it's a pro and con, depends on how you look at it. Then you have, like, I don't know, like 8 symbols, right? Like 8 pairs, major pairs that you will focus on. So
Yeah.
um, yeah, so those are the main difference. And of course, you have news, much more news on the stock market. Besides the macroeconomic news, you also have the earnings, and anything that will happen to the company will affect it, like a layoff or a new product or a merge between two companies. Those kind of news will push the price up or down. So you have a lot of activity, a lot of volatility, and this is why I like it so much.
So would you say
Yeah.
that would you say that there's you should have more focus on, or at least at the back of your head, think about the fundamentals more in the stock market when trading stocks? And because in the forex market, I don't really care about fundamentals.
Mm.
The only thing I care about is to make sure I'm not trading when there's a major news event, like for example a interest rate decision. I want to make
Yeah.
sure that I'm not in a position around that time. So in stock trading, do you care more about fundamentals?
Yeah. So you have the deep, like, dive into the fundamentals, but you also have the first layer that you need to know. So for example, if I'm scanning through the day and I'm looking for the right stock to trade on, then I would look for the news. I'll try to see if this particular stock, what type of news drives it right now. So it could be, like I said, FDA approved, right? A new product that comes out. And once I know that, I can analyze it and understand, okay, there are levels of news that will push the price significantly higher than comparing to other news that will push it just a tiny bit, right? So once I understand that, it will be easier for me to analyze the chart and continue to do the analysis and the setup and all of that. So you don't have to dive really deep into it, especially when you are a day trader, but you do need to know which news will be stronger than the other.
Would you would you say that, so when it comes to technicals, would you say that the when you're a technical analyst and you're trading a, let's say you're trading a fully um, technical based system, would you be able to trade in a similar way when you're trading the forex market? So let's say you have a trend following system, a quite simple trend following system where you're basically just looking to ride a trend.
Yeah.
Would that be possible in the same way as the forex market and in the stock market?
Very similar, and we need to remember that in the stock market you don't really have limitation, right? In the forex market, it's like rangy. Even though you will have a trend up, at the end of the day you can mark the levels from top to bottom, and that's the range of the price, right, of the pair. In the stock market, you can look at a stock that now is trading at $20. A month from now, it will be at 100, right? So
Yeah, that's I think that's one of the aspects where I think, it's most interesting. It's because you can have assets where you get an entry and it's just exploding. So I
yeah,
think I think
uh,
that's very very interesting. However, when I look at different stocks, because I try to apply my analysis on it, and honestly, like, it's the gaps. It just gets me every time. Like when I look at the chart, it's just the gaps are, because I'm very visual in my technical analysis, and when I see the gaps, it just destroys my whole view of TA. So I think that from a technical point of view and from a visual point of view, I think for me that would be the biggest difference. And
right.
that, I'm not sure if that's something I just have to get used to, because I am interested in actually starting to trade at the stock market more.
So the thing about gaps, obviously, we need to learn about it more and focus on what type of gap do we see on the chart, and then we can analyze it like on a technical level. But try to do either two things. One, imagine that there is no gap and there is just a movement to the gap. Or if you're looking at lower time frame than a daily chart, let's say an hourly chart, then you can add what we call extended trading hours, right? The pre and the aftermarket hours, and then the gap will be filled with that trading session, basically. So instead of
Right.
imagine it, you just add it, and you will see the bars, you will see the candles inside of the pre-market, basically covering that gap.
Well, that's amazing. Maybe maybe I should just go back and do that and see how the system works. And tell me if you want a little bit about the trader pool, because there's as I understand it, there's not as many funds out there. The forex market is just lots of funding firms out there. As we
Yeah,
know, it just exploded a couple of 1 or 2 years ago. And with stocks, I'm not seeing the same explosion in firms, but have read some about the trader pool. Maybe you could
yeah.
talk a little bit about what that is.
Yeah, definitely. So we try to build a solution for stock traders. As a stock trader, I I love to have a solution like we offer at Trader Pool, like when I started to trade, right? Because at the end, when you want to trade, especially if you're in the US, you needed to have at least 25K in order to day trade, right? It's called the PDT rule. So, and more obviously, most of us didn't, at the beginning at least, want to have 25K to trade, day trade actually stocks. So, what we do is basically give you enough capital to trade on. You actually trade a chunk from our pool, and like any prop firm, basically, we get you funded once you pass the evaluation. So, you have 4 tiers, you choose your own, you pay only once, you go through the challenge, the simulator account. Once you reach the target, we give you funds and you actually can trade, big names like Tesla or Nvidia or Amazon, $300 stock with a click of a mouse key, because we give you that fund. So between $20,000 buying power all the way to $260,000 buying power. So that's enough capital to do some nice damage in the market.
That's interesting. Now I have a goal. I have a I have a reason to
Let's
try
do that.
stock trading. I'm gonna I'm gonna get an account. I'm gonna look it up. I'm gonna get an account, and I know that's not the best way to learn trading. You should probably learn how to trade properly before getting a challenge account, most definitely. But hey, why not? Well, maybe I can do it live. I can do it live here in the trading room.
That
See,
will be amazing. We can do
yeah.
that together, head to head, even have like a nice one-on-one session,
Well, we know who's
competition.
gonna win that one though. But yeah,
I don't
that'd be
know,
fun.
you know, maybe for the long term, but there are some days when you're kind of off, and
I'm just gonna
Marcel,
long Tesla and then I'll log
yeah,
out.
depends on
Okay,
the day.
so
Yeah.
yeah, I guess. So and you have a webinar coming up on Thursday. Very interesting webinar. Yeah, 6% profit in 4 months. Now that, to me, that's insane. I'm really happy if I make that in a year. Um,
Mhm.
so to make that in 4 months, that's pretty nice. Would you? I mean, sometimes I feel like stock traders are making more money, like in percentage terms.
Hmm.
I'm not sure if that's true, but sometimes I see people posting their results on the portfolio in the stock markets, and like probably they get in on the stock and it just explodes on news or whatever. But some insane gains, 60% in 4 months. So that's an interesting one.
So
So
yeah, a few things on that. First of all, on the 60%, it's on the Nasdaq, actually, on the index, not
all
on
right,
individual stocks. But yeah, when you see guys posting their P&L, or maybe percentage wise, from time to time you will see like a penny stock, right? Half of a dollar stock that will go to five. So that's a nice amount of percentage wise, but it doesn't mean that the P&L, like the dollar, was high as well.
Mm.
In that, in our case, what I'll talk about this Thursday, that's actually a 100K account that I took to 161.
But that's impressive. That's impressive.
Thanks.
Um, okay, so you wanted to look at the Nasdaq, and think I would love to see how you're analyzing the markets here,
Yeah.
because and
That's
when you're trading individual stocks, are you do you take into account the movement of the indices?
Yeah, so that's a great question. First of all, it depends. It depends on what I'm trading today. Because let's say if I'm trading what we call stocks in play, particular asset like a stock, individual stock that is rising like crazy today, gapped up 10%. So this one probably won't look at the market and try to do anything like it does, right? So if the market is dropping down, but this one opened with a gap up of 10%, the market could continue down and the stock could easily continue to the upside, because today there is a major news coming and pushing this stock up, right? So in that case, it won't really matter. But if you trade in low beta, so for example, Tesla, Amazon, Google, obviously you want the market with you. So you got to analyze the market, the Nasdaq, the S&P, try to understand where they will go, and then take your aim on those stocks. Yeah.
So let's say you're looking at the S&P 500, and the S&P is at major resistance, and it just looks like it's just at major resistance across time frames. Would you at that point be cautious going long on the big companies?
Yeah, definitely. I mean, if it's resistance and you see some opportunity that it will drop, you will easily look for the short side or not taking long on those market companies. But again, if it's a stock in play that just popping up, it won't really matter, at least in the first hour and a half, 2 hours. Maybe like at the end of the day, it will start affecting it, because the stock that gapped up 10% and continue to rise, getting exhausted. So the market will be a little bit more, will affect it a little bit more. But basically, at least at the beginning of the day, it's all about momentum.
Right. And how important is it to get out before market close? Is this just up to different trading strategies, or is there actually, because with the gaps you can gap up or down? What's the danger of having an open position?
Yeah, I mean, if it's already gapped, you mean?
No,
Or
like how
generally?
important is it to how important is it to get out of the trade before the market close?
I mean, if it's your strategy and you are a swing trader, right? You want to take it for a few days, a few weeks. So that could be totally fine. Obviously, you need to understand if there is, let's say, earnings that will come out the next day or so. In that case, you would like to be out of that position. But generally speaking, as long as you manage the risk, lower your size before the end of the day, you will be fine.
All right, so
Obviously,
it's
there are
pretty.
some surprises once in a while.
Yeah. So it's pretty much like I'm in a swing trade, and prices reaching resistance, and tomorrow we have FOMC, so I might just close that trade to make sure that I'm out of the position in case the news event is just gonna go the total other way.
I mean, if it's tomorrow and FOMC is like at 2 p.m., right, Eastern time, so that's fine. You can still hold it for at least for the beginning of the day and close it just before the FOMC. And also, it depends on the Charles Dow used to say the theory, right? Used to say that the price is already showing everything inside, right? The chart will show you
Yeah,
everything,
price.
including
I
the
think
news.
What was it? Price discounts everything, right?
Yeah, exactly. So
Yeah.
in that case, and I truly believe that, and I saw it for many, many years, that's the case, because even if uh, even if we're talking about, let's take a random scenario, right? Like attack on a country or something like that. In most cases, there will be a nice group, a nice chunk of people that will know about this, right? If I'm going back, in the US, in 2001, the twins, right, in New York.
Yeah.
So obviously, a lot of people knew about this attack before. It says that Bin Laden at that time made a fortune because he knew that the market will crash. So from time to time, you can see those footprints on the chart before the big news. Now, obviously, those kind of what I just mentioned is kind of hard to predict, I guess, or see
Yeah.
it really. But on a smaller level, like FOMC and stuff like that, in a lot of the times you can actually see the footprints of the big money that piling in, trying to short it or buying it before.
Yeah, I'm definitely. Well, I guess I'm a technical analyst, so of course I would say that everything is is in price. If I was a fundamental analyst, I'd probably say something different. But I am of the opinion that fundamentals drive the market. However, the just like you said, the clues are visible in
Yeah,
price action if you're able to if you're willing to be able to if you can read it, if you can digest the information. So absolutely, I think you can definitely be a 100% TA trader and trade that, no
yeah,
problem.
yeah.
Right. So is it do we have Nasdaq on the screen here?
Yeah, yeah. Let's talk a little bit about it. I mean, first of all, when I'm looking at the chart, it's always going to be a naked chart, and this is something I've been mentioning for many years. From time to time, you will see a lot of traders that just put in a lot of indicators on the chart, right?
Hmm.
And the idea is just to remember that an indicator is just calculated from the chart, right? From the price or from the volume or together, right? So like an EMA, exponential moving average. This is something that comes from the close of each candle or the MACD or the RSI and so on and so on. So the idea is first to understand the chart. If you understand the price action and the movement, then it will be much easier for you um, to understand everything. And then you can use the indicator just to push it a little bit or give yourself another check in the box. But don't try, this is my tip at least, don't try to go to the indicators first and then the chart. Go to the chart first and then the indicators just to give you another push. Um, that's
That's actually a very undervalued tip. I think that is not only important. I think it's vital for new traders to understand that simplicity is the key. You start with something very basic, and then if you have to, and only if you have to, you start adding indicators. So, like
yeah,
you said, price action and is key. I think that is. I think most professional traders that I talk to are just say the same stuff. Price action center.
yeah. I mean, and you can, and it's not easy to trade, but it's simple to analyze once you have an idea of what you're looking for, and you have the system, you have like the flow of what you need to do, right? So at the beginning, I will go to the Nasdaq, taking either a 4 hour or an hourly chart, and then the only thing I need to do at first is just mark the levels. Obviously, the market, like any type of market, forex, crypto, whatever, it all goes in and out of liquidity levels, right? So that's the concept. Orders will get filled, and obviously this is how the smart money will move the price when they buying, when they're selling, and so on. So what you need to do is just go and mark those levels. If it's not, and this is something crucial to remember, if it's not a perfect level or a very visual level, then you don't want to mark it. I see a lot of the guys also put in tons of levels, and they are the only one that looking at it and actually seeing that level, right? So just
Yeah.
try to keep in mind that, for example, if what I'm marking right now, this is the level where I'm at, exactly where I'm at. Obviously, it's a level, it's not a specific point, but all of the algos, all human beings that trade in, look at it right now and see that this is the area where you need to put your line, or again, more of a rectangle, just to mark it. So this is the area, and if you want to really push it higher, then you can do that as well. But this is it. This is the resistance that we had before. Obviously, from time to time, the resistance will play and push the price down, and from time to time, it will range until it will break through it. Okay, but you gotta mark those levels exactly like you had here. This is the support level. We broke through it afterwards, went down to the next support level, and then we bounced from it. So first thing, just mark the levels. Try to keep it as visual as possible. Don't try to find those tiny little levels, because the idea is to take big liquidity levels and work on them, because you know that when the price will reach that, you will have your opportunity to trade it either for the downside or the upside, depends on the level. And me particularly, I'm looking for selling the top or buying the dip in most cases. This is what I like to do the most. I believe it's the most easiest way to trade as well. Like when it comes to finding the setups.
So
But
do you,
this,
excuse me if I'm jumping in here, but I
yeah,
have,
yeah,
a couple of questions here. So when you say that you want to, so basically you want to sell resistance and buy support,
yeah.
that's simple. But how do you, if you're in an uptrend, do you sell in an uptrend? Do you sell a resistance in an uptrend?
Yeah, and I mean, I'll show on the webinar in 2 days. And by the way, maybe the guys that listen in, Tomer or Maya, if you can drop the link for the webinar too. And the idea, for me at least, is even if the market is going higher, I will try to sell the top once reaching major support resistance. This is exactly what I did the last 4 months with that account, because obviously you would look at it and you could say, well, why didn't you buy it and hold it for that nice move to the upside? But it's easier for me, at least, to find that area where I can just have my setup and my edge on that trade. So yeah, this is why I like to do that, even on a uptrend market. Yeah.
Do you have any time frames that you're, any favorite time frames for this? And of course this works on all time frames, because it's, supply and demand. You basically
Hmm.
sell resistance and buy support. But
Yeah.
what are you trading in a specific time frame?
Yeah, so because I'm a day trader by nature, what I'll do is a mix between the two. So I will mark the levels from the 4 hour or the hourly chart, and then drop to the 1 minute, try to execute that trade, and basically scale into my position. I will talk about it even more on the webinar 2 days from now, but basically this is what I'm looking for. If you are a swing trader, you can take your levels from the daily or even 3 days chart, and then try to find the execution part on the hourly chart.
So do you have any example of, so what I would be interested in is do you have any specific entry criteria? So let's say price is reaching your support area.
Yeah.
Is there anything in particular you're looking to for price to do just before you entering?
Yeah, so when it comes to buy the dip or selling the top, I'm using a few elements, but I gotta say that as I continue to grow, also as a person and as a trader, in age, and as a trader, I can see that a lot of the times those stuff will become less and less interesting, or maybe not interesting, but less important, okay? Because once you manage the trade correctly, this is where you actually find the edge. So for example, when it dropped to this support level, you had this support level right here. Yeah, the resistance was here, and then it became support. Let's say you missed that because you wanted to see it holds, right? Then it dropped again. Here, you already know that you have a chance that it will bounce, right? You don't know by how much, you don't know that it will, but first of all, you saw support from previous day of previous period. Then you understand that it has the potential to bounce. That's the first thing. Then you want to see high volume coming in once you reach in that liquidity level, because especially, and this is also something different between Forex and stocks or indices, the volume, right? The number of shares or the number of contracts that switched hands between buyers and sellers. Once you see that there is high volume coming in on a minute chart, on a 1 minute chart, high volume coming in when you drop into this liquidity level, then you understand that a lot of the people are looking to sell it, while smart money actually buying it from the dip, right? So imagine that a lot of the guys bought it here and put their stop losses right here, or maybe even in break even. Now that the price is dropping down, it's actually automatically activate the triggers, the sell stop market, right? So it's activating sell, 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 sell. And on the other side, obviously, you need to have a buyer. So in that case, smart money coming in and buying their positions, right? So you will have high volume at the bottom, at the support level. And you can also add to that the MACD, where you can see a nice positive diversion, right? The price is going down, lower lows, while the MACD is creating new higher lows. So these are two parameters, or three of them. So support, volume, MACD. But the most important thing that I mentioned is basically managing that trade. And what I mean by that is that you don't need to wait for confirmation here. You actually add to the position or enter in the position here. And once it goes to your favor, you can add more. Or if it dropped to the next level, as long as it's close enough, you can add more to it as well, as long as you're not risking more than what you're willing to lose. So for
I
example,
think that
yeah, go
yeah, I
ahead, go
think
ahead.
that that's very interesting the way you're entering, because I think for me, I'm very systematic with my entries. Like I need a like specific signal and everything to
Yeah,
align for me to enter. But I think the like the next journey in my trading, trading career would be to expand on that, to average into position,
yeah,
and to start buying when it hits the level, and then buy more when it moves in my favor. So that's it's interesting to to talk to somebody who actually does that, because I'm thinking that that's something I want to start testing.
yeah.
um
So that's great. I've been, from I guess 8 years or so, I did a very systematic trading, and it was great, very profitable. Everything worked perfectly. But once I switched it from systematic to what it's called discretionary trader, right?
yeah.
Then the profit made an incredible jump compared to the systematic, because
Yeah, but you need to be very focused though. Like when you go from systematic to discretionary, because that's I'm in the
yeah,
process of doing that myself, where I
uh,
like get a signal on like the 4 hour, and then I enter based on just market structure on the lower time frames. And
yeah.
what I've seen is, with time, the better I understand trading psychology, the better
Mm.
I get that discretionary part.
Yeah, yeah. And also, when understanding, when you're saying psychology, basically how the price moves, right? So buyers will come at support, and then when it will drop again, they will come at the next support, and maybe you will hold it, and so on. So once you understand that, you can manage the trade much more easily. And I talked about it many times in the previous live trading. If I'm going in here, let's say I'm risking $100, I'm willing to lose $100, right? Here, I'll take $20 risk. I'm not going to take the full $100. Then I'm going to add more here, and now I'm down, let's say $50. out of the 100 that I'm willing to lose, and I'm adding more to my position here. So I'm basically averaging down my position, but still within the $100 loss that I'm willing to take. If it will get to my 100, I'm down. I'm out of that trade. But the basic of scaling in and becoming a discretionary, again, it's only my opinion. I'm only one guy. There is no right or wrong or zero or one, right? There's a lot of ways to trade and make money. But the idea, in my opinion, is to manage the trade where you enter very low or like 20% out of the max loss that you're willing to take on the position and add along the way, either when it drops down against you or goes to your favor. And then you give yourself enough space to play with the level. And this is why this is like a sneak peek of what we can expect to see on Thursday on the webinar. This is why I made 60% from that 4 months, because even when the price went against me, because I entered small, I can actually add it more to the position until it worked.
So we got a question here, like isn't this adding to losing positions? And I think you are you using a stop loss, or do you have like a mental stop, or do you have a technical level where if price drops below this level, I'm out, or is it purely based on the risk?
So it's based on the risk, but you can cut it before if you see that it's not acting accordingly. So for example, let's say I'm buying the dip here, right, on that X, and we don't have this level here. The next level, let's say it's only here, like very low, much lower than this, right? In that case, I took that $20 risk. It dropped again. I added more $20, and then I maybe added more here. And when it dropped, I'll be out here already with $60 loss or $50 loss. And I won't wait because I know that the next support level is much lower than that. So I can easily cut my loss before the max loss for that position, right?
So with this strategy, you're gonna have quite a few small losers, right?
Mm-hmm. Yeah, yeah.
So
And
your win rate might be lower, but your like the winners are gonna pay for the losers.
exactly. So you will have few things. Again, depends on how you manage it and where is the next level. In that case, specifically in that case, it would be much more effective to buy here some and buy here again when it bounced again to the level, and when it dropped, add more. Sorry, and add more to the position, as long as again you're within that $100 risk or the number that you're willing to lose. Because you have a closer and a strong support level that come below it. But
So
if
so let
yeah,
let's say you're risking $100. So let's say, so when I'm talking about risk, I'm also, I'm always talking like in percentage terms. So let's say that $100 is 1%, and you scale in, so you see the price is hitting your level, and you buy, so you buy a position that would, so you risk $20 maybe on the first buy. And if price goes lower, you continue to buy until you hit that risk target, like 100.
yeah, basically, yeah, until you have the full risk of the trade, or like I said, if it dropped below and you don't have anything, any reason to add more to your position, then you don't do that. The problem with that idea or system is that you need to be disciplined. You need to wait patiently until you add more to your position. You're not just gonna buy and then a minute after add more and a minute after add more and so on. You need to wait for those levels to actually prove themselves, or actually at least reach them, in order to add to your position. And the
So
second thing,
it's
obviously, is just to stay within that $100 loss.
so it's important to, you can't have resting orders in an area, right? Because then if price falls, it's just gonna fill all the orders, and then
Now,
you'll lose the full amount. So
yeah.
you'll add automatically, right? No,
So I will
you'll
manually. You mean?
yeah, manually. Yeah, exactly.
Yeah.
All right, that makes sense. That makes sense.
Yeah. So Patrick, in regard, hopefully we answered your question. I mean, the idea is just to keep yourself within the dollar risk that you're willing to lose and break it down instead of taking all in at once. Because you don't, it's insane to say to yourself that, you know what, I know that right here from this moment, the market will go up, right? It doesn't make sense that you will win it as much as you need at least, because the market will play along. You know, take some stop loss out, and take some liquidity, play with it, and then maybe it will bounce to your favor. You got to give yourself, you got to give the trade the opportunity to actually start moving to your favor.
Yeah, this is great information. It kind of like it's. I'm actually going to try this. I think I should definitely backtest some of my old trades to see, because one of my, I mean, I do miss a lot of trades. You know, when you don't have that clear entry trigger, that systematic entry trigger, you
Yeah.
do miss a lot of trades because it just keeps running. So I'm thinking, when price does enter my area of interest, I might start buying small positions and only do that full risk when it really does confirm. That's
Yeah.
definitely something
I mean,
I think I'm going to
also
try that.
definitely do that, at least for a try, like you said. You know, give it a run for 2 weeks, a month, on small chunk. Like, don't risk a lot, but just to try it out to see if it fits you. And also remember that once you enter in, let's say, with a $20 risk out of the 100, then it's much easier for you to commit to that trade on the mental level, right? On the psychology side of it, because you're only risking $20, so out of the 100 that you're willing to lose. So that will be easier for you to click the mouse key and really get involved with that trade.
Yeah, that's true. So, uh, yeah, I mean, it's all about averaging in and buying small amounts in that case, right? So we have a question here of TP. Where would you TP at the next resistance area or after a certain number of pips? Well, I guess if we're talking about the stock market, we're not really talking in terms of pips, but
Right.
we'll.
Yeah. So in the market, we're talking about either like the Nasdaq, the indices. We will talk about points. In the stocks, we will talk about cents or dollars, right? Or we can talk about in terms of the risk unit,
Yeah.
right? I'm risking 1 unit, so yeah.
So when let's say you're in a trade, so you hit the level, you're in with full risk, and you're getting that confirmation. Like, when do you exit at a specific level, or do you like exit when you see any signs of reversal?
Yeah, so I'm also scaling out of the position in 99% of the time. It won't be just one click. Exactly the same mentality that you're going into a trade. You got to give yourself the same opportunity to get out of that trade, because you don't really know that, when they price it resistant, you don't really know that that's it. And the price is done and it will drop down right now, and you got to get out with the full position. So in that case, you want to scale out as well. Once reaching resistance, that will be a great place to sell some of your shares or some of the position. Once reaching shift in the market, let's say I took a long on Tesla, and the Nasdaq reached a major resistance level. Tesla didn't, but the Nasdaq is at the point where it could reverse. Then I can take some out as well. You might want to use, if it's intraday, you might want to use like pivot points that will also show you like resistance level intraday. And of course, the ratio between your losing and your winning. If you're risking 100, go for the $300 profit, and you can start to scale out there.
Right, so it's very interesting. I love how trading is like you can basically trade in so many different ways. So you're
Mm.
basically scaling in and you're scaling out, and you're very active, it seems, with managing your positions.
Yeah, at least on those levels. So on the entry side and on the exit side, right? But in the middle, I just let it ride. And but yeah, you want to manage the trade. That's I guess the best edge that we have compared to any type of um, game or a risking, or I wouldn't say gambling, but on a calculated level, right? Because when you go to a roulette in a casino, you place your money on the red or whatever, and that's it. Once the roulette started, you cannot really do anything about it. You're either gonna make money or lose it, right? But
Yeah, that's a
in
good
our
point.
case, we actually control some, have some control of the outcome. I can risk 100, but I can cut the trade and actually lose only 50. I can add more to the position and maybe make 300 or 500 on that, right? So we can manage the outcome basically on some
That's
level.
actually true. That's kind of like I never really thought about it that way, but it's obvious, the way that because I always thought about the my edge as my technical edge when I'm getting the signals. But you're absolutely right with trade management being a very important edge. Like if you have that, if price is moving into your favor, you move that stop loss, and if you get stopped up, maybe you lose half an hour instead of that full hour. So
Yeah.
yeah, that definitely makes sense. We have another question here from Patrick, and I think what he's referring to here is basically like adding orders on specific fib levels. But I think that's just one another way and another technique, another tool you can use to do something similar, right?
Yeah, to add to your position, definitely. I mean, you can use, obviously there are many tools. I usually use, like I said, just the levels on in the market, what I marked before, or just finding going deeper to like a 1 minute and looking for a momentum, so it will break through, retest support, like become a support, resistance will become a support. I see the market, the price started to shift, to start pushing higher, and then I add more to the position, right? You can use the Fibonacci levels as well. Obviously, test it and see what will work for you best.
Yeah, I mean that's the Fibonacci tool is something I use a lot. So I do something similar where I look for a trend and then I buy. I try to buy the dip, the bounce on resistance in that trend, and I want price to hit a specific area within the fib tool as well. All right, Patrick, awesome questions today. And
Yeah.
if you guys have any more questions, just let us know. Here we have one: divide your trade in small portions and place certain percentage of the position at certain price instead of placing a trade at a specific price. Not sure I understand the question.
I guess instead of going all in, basically cut it to small portions.
Yeah, that's what I did, and that's what doesn't work for me. So what I did was I saw an area of interest, right? And I took my full risk and I divided that up into, I believe, four different orders, so 25% on each, and I
Mm.
filled the zone where I wanted to enter with all of those orders. And usually what happened was his price just went straight down, filled all my orders, and then straight to stop loss. So I think that's what I did when I wanted to average in, and I think that's what is keeping me away from the idea. I think that's some sort of PTSD, man. Like I lost so much money doing that. So, but now when you get filled with 20%, and then I'm not gonna enter more until I do see what I want to see to get that
Exactly.
good average
Yeah,
entry.
just wait for it. Exactly as you said, just wait until the right moment will arrive and then add more to the position. And you know what, you can also, if it's different levels, let's say in that case, right? So you put your entry here, and then you know that the next level is here, then you can add a limit order to wait and get filled here, right? But not at the same, because you don't, again, you won't give yourself, on that case you won't give yourself enough space to play with the level, take some stop losses out, stop hunting, and all of the good stuff that we really like.
Yeah, that's it's this is awesome. I feel like I'm learning a lot today. A lot that I'm gonna take with me in my own journey. And I think it's amazing to be able to. I've been doing this for 7 years now, and I do think that I have a solid system that I'm trading. But every time I talk to like another trader who trades something completely different, a couple of ideas starts popping up. Like, I got to try this, I got to test that. So I think we have like 10 minutes left here. I think it would be interesting if we're looking at the Nasdaq here, and if we could look at like the local price structure, and maybe if you could say like what would be, in your opinion, the next possible trade for you in Nasdaq. I'm not sure if that's something that would work for you,
Yeah,
the way you're.
yeah, yeah, definitely. So basically, like I said, in the last 4 months from September, I started to short it even on the way up. And again, we'll talk about it in the upcoming webinar on Thursday. Basically, what I'm doing right now is just waiting for two things to happen. This is my latest update or analysis. So the market is moving higher in a channel, right? A trend, and we got a nice move to the upside. We got a nice pace to the upside to reach, but we're kind of ranging between those two liquidity levels. So in that case, specifically now, I need to wait until I'll reach the best possible outcome, right? And that will be either breaking through that level, so at around 17,000, so going higher, retesting it, hold support, and then go up. And I know that the next resistance level should be right here, yeah, at the top of the range, as it did before. Every time we reach that range, at the top of the range, we dropped. So it makes sense to me that if this resistance level, we will break through it, it will become support, and then I'll start to look for the buy the dip on the pullbacks, basically, right? So not like a mix between a buy the dip and a pullback. That's one option. The second option, a more easy one even, it's just breaking that support level of the channel, retesting resistance, this range here, and then try to go short. So this also will be something similar to a sell the top at a pullback, basically. So these are my two scenarios to start working the levels.
Yeah, and that makes perfect sense, and I love how simple it is. So, like when you talk to like traders who really know how to trade, and you ask for analysis, it's like, yeah, 30 seconds, that's it. That's what we're looking for. It's very clear levels, and I think I'm watching this and I'm thinking, yeah, I would probably trade it the same way, but I think your edge, if you agree, lies in scaling in and out, right?
Yeah, yeah,
Yeah, because
100%.
I could definitely see myself trade this in the same way, but there's a high likelihood that I would miss the entries because there's no retest, there's no signals. But yeah, like just starting to scale in when you're seeing the stuff that you want to see. Would you? So if you break to the downside or you break to the upside, would you start scaling in on a confirmed breakout, or if you see the level holding as support?
Yeah, so on the short side, it will be more easier, meaning that when it let's say it dropped and retest this level, right, this rectangle, and basically what I'll do is just go short once we will hit that level, right? Even with no confirmation or anything like that. Once it will reach that level, that rectangle, I will start shorting it. But again, since I'm scaling in with a small portion, I give myself the opportunity that even if it will drop a little bit and pop up to the top of the range, I can add more to the position here. And now I give myself the opportunity for a better execution price and also a better chance for it to drop down and really make that move.
So you always wait for the retest.
In that case, yeah, because I need to short it, so it won't happen here because I'm still working within that trend, that channel, right? So I need to see that it's actually breaking that channel, and retesting the resistance, because it might just break it and maybe reach those levels and then bounce off again. So in
Yeah, that
that
makes
case, I
sense.
want
So,
to, yeah.
but if you get a break to the upside, what happens then? Do you buy the breakout or?
Okay, so on the breakout, I won't do that as well. I will wait for that. In those cases, I will wait for the pullback. So a break, I mean, I can add maybe again 20% at the break, but in most cases, I won't. I will wait for that break, then it dropping down. And once it will reach that, so I don't really need to get a confirmation, but once it will drop to this level, I'm in. Now let's say it's playing around and then dropping down again to next support, basically this area. I'm adding more to the position here. And now when it's bouncing up again, I'm in a good place, right?
All right, this is awesome. So you're also like you're taking most of your knowledge in technical analysis and then applying it to the chart, and you're looking at like a discretionary approach
Mm.
with trend lines and horizontals.
Yeah,
Very fairly simple approach,
it's
but
got to be.
yeah, I think like the best traders do have a very simple system and a simple approach. I think all right, so we're gonna do like one more question here before we wrap this up. We have one from NWJ. So do you keep scaling in with more risk if you can secure some entries at free risk? Maybe this would be adding entries from lower time from the support and move from 4 hours or something. So basically what he's asking here is if you can when the trade is free, so let's say your stop loss is at entry, will
Mhm.
you add to a winning position basically?
Yeah, so you can do both, right? Because from time to time you will have a trade. Let's say you took that long here for some reason, and from time to time it will go to your favor right immediately, right? Or it's not gonna drop below it, let's say. So in that case, I took 20% here, and now I need to add more. If it's not dropping down, the next best way to add is just by breaking that consolidation, right? Break the consolidation, maybe on a lower time frame, break and retest the consolidation, and then you add more to your position. You took some out, you have your stop loss, let's say in the break even. You can add more to your position as long as you understand that the stock or the asset that you're trading has enough place, enough room to continue higher, right? So in that case, you know that this is a major resistance. You probably won't add more to the position once it will pull back, even though, as you can see, it moved higher. But in that case, I wouldn't add more to my position since this is a major resistance. If you know that you have more room to play with, then you can definitely add to the position. Um, yeah, even if you took some out, even if you took some of the partials out, some of the position out.
Yeah, that makes sense. That makes sense. All right, I think this is a great way to wrap this up because I think we have at least I have a very good idea and a good understanding of how you're trading and the way you're, uh, especially the way you're like managing a trade and scaling in.
Yeah.
I would recommend that you all make sure that you are ready for the special webinar this Thursday. Is it gonna be? Is it gonna be on here on YouTube?
It's gonna be, but go to that link. Let me share it in the
You have to
chat.
sign up on the link, right?
Exactly. Yeah. So go to the link that we just shared, and then sign up there. Obviously, put a notification or a reminder. It's gonna be at 9. Yeah, 9 Thursday, 9 Eastern time Thursday. This Thursday.
No, yeah, nine names is same time as this live stream started. So yeah, I'm gonna be checking that one out. I'll be looking at that one for sure because I'm very interested to see how you managed to pull that off.
Let's do it. Yeah.
All
Where's
right, guys. Anything you want to say here before we wrap this up?
for me or for the
Yeah,
audience?
not for well, I guess for everyone, but yeah, I guess that's a no.
No, I'm good.
All right, guys.
But yeah, it was
Thanks for
great.
joining,
Thanks.
everyone, and I will see you guys in tomorrow's webinar as well, where we have the live trading room tomorrow, 9 a.m. EST, same time, and Saul is joining me for some live trading and analysis. All right, guys. Thank you for
Nice.
joining, and
Take
see
care,
you guys
guys.